All right, so our presenter for today is going to be Casey. I'm Frisco, I'll be your host. So today's agenda will really be covering unshared versus shared income, our gross income versus office, defining a sliding scale commission plans. We'll also show you how to set some things up when you're specifically a team within a brokerage. We'll show you when start talking about our zero line items on commission templates. We'll define a little bit more into shared gross income, and then we'll show you how to set up min-max deductions and start off with some commission plans for teams. Now, everything you see here is going to be commissions related, so it is going to be available regardless of what plan you're on with Brokerment, from Simple Start to Enterprise. Now, if you do have any questions throughout the webinars, please feel free to go ahead and ask. Please use the Q&A section. If any questions do come into chat, I will move them over to Q&A, but I will reiterate, please, if you can, use the Q&A. It does make everything a whole lot easier, and it ensures we don't miss any important questions from you guys. Now, if at any time after the webinar you do have questions or something does come up later, you're more than welcome to send an email to support@brokerman.com. You could also use your online chat via the Need Help button inside of your Brokerman account, and of course reach out to your implementation specialist, and they'll help you with whatever else you need. So that wraps up for my little introduction. Casey, we are ready when you are.
Awesome. Thank you very much for the introduction, Frisco. Welcome everyone to our Best Practices Commission webinar. I really appreciate you guys taking the time to join in on this. And as Frisco said, feel free to ask any questions as we go through everything we plan to cover in today's webinar. So to get started, I want to go in here and go ahead and hop into our commission plan templates. As we all know, this is where we come to set up our automated commissions. Once in here, you can see a list of commission plans that we've built out in the system. For today's scenario, we're going to be starting with a brand new commission plan we called Best Practices. Whenever we create a new commission plan, the very first and only thing that we see in this template is going to be this split line. Now, this split line is unique from pre-split and post-split deductions. It's important to understand that this split line, as a default, will always determine a split between an agent and a brokerage. So if we define our split line at 70%, it automatically knows that that other 30% is going to be going to the brokerage. This is very important to understand, especially for the teams we have using Brokerment, where you're a team within a brokerage. In a lot of scenarios, we aren't going to be defining a split between the agent and the brokerage. So a very common practice here is just to put 100% in the split. And what happens is we define those team splits as deductions. One great thing about a split or any deductions is we have the ability to set up sliding scale commission plans. When we want to set up a sliding scale commission plan, there is a few metrics that we first need to decide. The first one is going to be the metric that we are going to be measuring, or our sliding scale base. We also need to define who that metric is going to be accrued by. It can be accrued by an agent. Also, a great feature for our teams out there is we can define this to be accrued by an agent's team. Just to kind of hop into this a little bit closer, if we were to set this as a team accrual, we can define a team in Brokerment, and it will take all team members' company dollar contribution that is accrued as a team. So now not only can we set up these sliding scales to be accrued by individual agents, we can define these tiers or these caps by team goals. The next thing we see is we need to set when that period is going to reset. As far as the period resetting, we do have quite a few options. Very common ones is going to be year to date. That means this sliding scale will reset on the first of the year every year. We also have month to date. that will be up to today's date for the next month, the previous month. And then we also have month of acceptance date. So this one is unique. Anytime an acceptance date is defined in a transaction using this commission plan, it will be the accrual of your metric for that entire month. So if we had an acceptance date of December 20th, 2018, it will take the accrual for the entire month of December before it resets. Another very common one is we have it since last anniversary. This one is always defined in all of your user profiles. And your user information, there is a field for your agent's anniversary date, and these plans will automatically reset based on each individual agent's anniversary date. A couple of the unique ones, first coming to the last 12 months to the current date. So this will give you the entire last 12 months up to that same date of the previous year. The next one, last 12 months to the end of the previous month. Very similar to this, but it goes 12 months back to the end of the previous month. So in this scenario, if we're using this commission plan today, December 20th, it would count all the way back until the very last day in November, being the previous month of the last year. The next one we have is custom range. So this allows us to identify a custom range that we want these tiers to reset. You can see that we have a spot for a start date and a spot for an end date. A very common scenario for custom range is some brokerages have their sliding scales, they don't reset. So as an agent accrues, let's say, an amount of sales volume, he can continue to move up in tiers, and they can continue to move up in tiers for their entire time they are with that brokerage. So in that scenario, we would set a custom range and just set an end date or a reset date for something far in the future, because it's safe to say that that agent will not be closing any more deals for the brokerage in the year 2100. The last metric we have here is going to be this transaction only. So this will define whatever sliding scale base you have for this one transaction. So let's go ahead and talk about some of these bases. So this is the metric that is going to be accrued for these commission plans. The first one here, gross commission. I always like to be very clear with gross commission. So when we define a sliding scale by gross commission, it is taking the total combination of both sides of a transaction. So for instance, if you only represent the listing side and you're getting 3%, you don't represent the buying side and they're getting 3%, gross commission will always be defined by the combination of both sides. So in this scenario, it would be 6%. The next one we have down here is going to be company dollar contribution. This is defined by dollars that the agent pays to the company. So a good example of that would be if an agent had a 70-30 split with their brokerage, that 30% is money leaving the agent's hand and going to the brokerage. So it therefore is going to count towards their company dollar contribution. Other instances would be any deductions that are reducing the agent's commission and being paid to the company. The next one we're all very familiar with, sales volume would be total sale or purchase price of any property or whatever sales volume you defined within that transaction. Another very cool one here is going to be transaction points. So every time this commission plan is used, it's going to count as a transaction point for that agent. A great instance for this is maybe your brokerage wants to charge a transaction fee to your agent for the first 5 or 6 deals they close each year. So we can go ahead and set this up by transaction points, and we could give it a metric of 5 points. So when the agent closes their 6th transaction, it will automatically know to stop charging that agent a transaction fee. Next we come to agent commission. This is always going to be defined by your agent net. So the amount that the agent has after any and all deductions have come out of their commission plan. And last but not least, we do have commission basis. This is going to be the starting point for your agent's commission. So this will be defined by the one side you guys represent, or two sides if they represent both sides. So this is great to define the difference between commission basis and gross commission, because commission basis will always be pulling off of the side you represent and not both sides of the transaction. So let's go ahead and set up one of these plans. When we set our metric, we can go ahead and say sales volume is what we're measuring. We're going to have this one accrue by the agent, and we want this to reset every year to date. And so how we would set this up is we could define the split. We could say this is going to be 70% to the agent. It automatically knows 30% is going to the brokerage. We can add in the tier. We say until they've accrued $750,000 worth of sales volume. And now we can define their next tier. Maybe here they're going to bump up to 80%. And we can continue to add tiers, as many as we want on this sliding scale. Once the agent reaches 1.5 million, we can go ahead and bump them up to an 85%. So as this is defined, once that agent reaches their 85% split, it will always stay at 85% until year to date when this sliding scale resets. So now we've set up a sliding scale split. Let's go ahead and talk about pre-split and post-split deductions. They have the same functionality and sliding scale abilities as the split. I always like to be clear that a pre-split deduction is going to be a deduction that comes out of the agent's commission before it reaches their split. Post-split deduction is deducted directly from the agent's money after the split has occurred. So when we go to set up our post-split deductions, we can go ahead and define its name. And then just like before, we can go ahead and decide if this is going to be a simple deduction or if this is going to be a sliding scale deduction. Now, what's great about when we're setting up sliding scale deductions, a really nice functionality. Let's do something similar. Let's say this is going to be based on transaction points accrued by the agent year to date. We're going to charge this agent $300 for the first 5 transaction points. So on their 6th transaction point, we will no longer charge them this transaction fee here. Another instance is we can also work off of any of these metrics. It doesn't have to be a whole dollar amount. So if we were to say remaining balance after deductions, and let's say we were going to take 15% up to 5 transactions. After 5 transactions, we will deduct 0% from their commissions. What we can do now is we can actually set a not less than or not to exceed for this deduction. If we don't ever want this deduction to be less than $250, we can define that here. So on a transaction, if this 15% only equals to $180, it's automatically going to increase that deduction to $250. Just the same, we can set a maximum. Let's say it's $750. So if this 15% equals out to, let's say $1,100, it's automatically going to reduce that deduction to a $750 deduction. One other thing to keep in mind whenever we are adding deductions, we need to define who this is going to get paid to. We can either add in a user or contact. Maybe if this was going to get paid as an admin fee or a transaction coordinator fee, we could add our transaction coordinator in here. We can also have this paid to the company. Again, keep in mind this now counts as company dollar contribution. So if your metric is set on company dollar contribution, this value will be counting towards that metric. Once we define who we're paying that deduction to, we can go ahead and add that to our commission plan. And as we work through this, it happens quite often. We have a lot of these sometimes deductions. Sometimes there's an admin fee, or sometimes there's a transaction coordinator fee. These can easily be added to your commission plan templates as $0 line items. What's convenient about adding $0 line items is in a transaction, it will automatically be added to every commission plan as $0. So if there is that fee on a specific transaction, all you need to do is go in there and enter a value. Let's say, for example, we have our admin fee, and it's $0. It gets paid to either our admin or we could say to the company. We can add in as many of these $0 line items as we want. And let's go ahead and jump into a transaction to see what this really looks like. So here I've created a transaction. I'm going to go ahead and apply that plan that we just created. And so what we see here is we have our agent's commission basis at $9,750. It came down through the sliding scale split. It measured where my sales volume is at year to date. Based on that value, it decided my split. So now my agent is holding on to $7,800. It automatically deducted this $250 deduction. And I have my $0 line item here already in place. So if there was an admin fee, all I would need to do is come in here and define that amount. Adding $0 line items to your commission plans, especially if you have several of them, can save a lot of time for yourself and your admins of having to come in here on each transaction and create that deduction from scratch on every transaction. One thing that comes up a lot in our commission plans is how do you guys add in additional income to a transaction? So there's lots of things that can happen on the brokerage end. Maybe you're charging an MLS fee to the buying side. Maybe you're charging the seller a fee, a transaction fee. Many scenarios when we need to add additional income to the brokerage. So we have a couple different ways of doing that, and with each different way we have some options as well. To start off, we always want to come up here and highlight our brokerage. And adding these additional fees or charges can be added in two ways. We can either add gross income, or we can also add in other or office income.
Quick question for you, Casey. So when you're changing the line item admin fee, can we change it to a percent, or does it have to be a straight dollar amount?
So any metric, value, or deduction we have in a commission plan can always be adjusted either in your templates or per transaction. So in this scenario, if we were to look at our admin fee, we have it set to a dollar amount in our commission plan templates. We can always change that anytime we like here based on any of these values. Let's go ahead and take a second and kind of look these over. So of course, we can always enter a whole dollar amount. We can take a percentage of side income, which is going to be the award allocation for your side. In this scenario, we're starting off with 3%. We can take a percentage of total gross commission. Again, gross commission, a combination of award allocation for both sides. Percentage of price sold. A percentage of remaining balance. This is the most common or a very common one. Wherever this deduction is in the commission plan, it's deducting a percentage of whatever is left over. So here on this $150 admin fee, if this was set to remaining balance, it's going to be deducting a percentage of whatever's left after all these previous deductions happened here. A percentage of pre and post split balance. So it's looking at what the balance is pre-split, after any pre-split deductions before it goes into the split, or post-split balance. It's going to be this $7,800, whatever is on this, this line item split. The next one would be the percentage of the company split. So in this case, if this was a 70-30 split, it's a percentage of that 30% that is going to the company. And lastly is percent of commission basis. A lot of people question, well, what's the difference between commission basis and side income? So both reflect your side of the transaction, but you have to remember, commission basis to an agent can always be reduced by pre-commission deductions from the brokerage. So if side income is $3,000 and the brokerage takes a pre-commission deduction of $500, that will reduce the agent's commission basis to $2,500. So that's how you will always define the difference between side income, which is your award allocation, and commission basis, which is side income minus any pre-commission deductions from the brokerage.
All right, thanks for that. We did have a few more questions come in. We've got two in from Larry. It's really two parts to one question. The first part is, what about adding extra award to an agent? Basically, if we, instead of a deduction for that 500, what if we wanted to add more money to him? Now, the second half of Larry's question is a little outside the scope, so I see what you're asking. And for your clarification, Casey, it's in the event that an agent like won some form of contest and the brokerage just wanted to give him $500. How could they do that without it being a part of commission?
Perfect. Great question.
Yeah, sorry. So for a situation like that, that extra 500 is more financial because it really has nothing to do with the transaction itself. But Casey will show you how to add in additional income.
Yeah, so I should cover both those questions as we go into adding income to a transaction. I'm refreshing on that. So we have two different ways of adding additional income to a transaction. We can add gross income or other/office income. So the difference between these two options is anytime we add gross income, which we do simply by clicking on the gross income line, this will reflect in your reports for this transaction on your office gross line. So right now, gross income is set at $9,750. If I was to add an additional gross income of $495 on our reports for that transaction, our gross income will report $9,750 plus the $495. Now, some scenarios, and it is unique client to client on whether they want that to reflect on the gross or not. If you do not want this amount to reflect on the gross income, but still add to your office net, we're going to go ahead and add other income and or office income. So any money that we add to the brokerage from office income, we'll add to the office net. But when I look at this transaction on my report, my office gross will be my starting point office gross. It is not affected by office income. One thing to keep in mind whenever we are adding income, whether it's gross income or office income, instead of a deduction where it wants to know who's receiving the money, we need to define who we're receiving that money from. In this instance, I'm going to be receiving this money from my buyer. And now you can see we've added an MLS fee of $200 additional income. It's added to my office net here, but my gross income is unaffected. So another difference between office income and gross income is whenever we add gross income to a transaction, by clicking on the gross income line, we have a couple different options. We need to choose whether this gross income is going to be shared with our agent or unshared. So if we choose a shared income, let's say we added on a $300 shared income, that money will now be added to my agent's commission basis and will then go through their commission plan. If I add that gross income as unshared, this now adds to my office gross, but does not affect my agent's commission basis. Let's say we charge our seller a transaction fee of $250. We receive that from our seller.
Yeah, that looks fantastic.
So what you'll see now is we've added this $250 unshared income. My office gross is now increased to 10,000, which is going to reflect on my reports for this transaction. But when I look at my agent's commission basis, it has not been affected. It's still the original 9,750, which was our award allocation amount. But when it comes to adding or deducting money from the brokerage, this is not an automated process. You will do this on a transaction per transaction basis. The reason for this is income from the brokerage or into the brokerage needs to be defined on either who we received it from or who we are going to be paying it out to. Typically, especially when we talk about income, is that income is coming from outside sources. It's not necessarily being pulled from agents or users in the system. So we need to be able to define who we're receiving this money from.
We've got a few more questions in. We've got one from Brenna. Question on multiple commission plans for an agent. If the agent had a sliding scale on 1 for their GCI, will it include all of their gross commission or just gross commission for that one commission plan? So anytime you have a cap based on one of those bases, regardless of which commission plan you use on a particular transaction, that one cap plan will look at all of their closed transactions. So just because transaction B, I use the second commission plan, on transaction C, when I go back to the capped one, it will include transaction B. And we've got one from Miss Regina Brown. Another similar question about other income such as BPO fees, in which the brokerage will take a 20% cut before forwarding the balance to the agent.
That's a great question, Regina. So let's talk about that. So that 20% isn't necessarily going to line up with the agent's commission plan. So we can't create that as shared income. So our best practice for that scenario would be go ahead and add that additional income as unshared. And let's go ahead and just look at your scenario. Exactly. So we have a BPO fee. And we can define it by an amount or a percentage, whatever it may be. But now we've taken in this amount of money. It's unshared, so the brokerage is holding on to all of it. Now we can pay this amount out, any amount we want, to our agent by simply creating a post-commission deduction. Post-commission deduction is only deducting from your office net. So you've just taken in unshared money, and now you can define how much you want to pay out. We can say $40 of it was going to go to our agent, Casey. So now we've paid that out to Casey. Let's go ahead and turn that to $1 because we've paid that out to Casey. And now we can see that it has increased or added to his agent net as well. So again, when we look at this transaction on a report or this agent on a report, we're now adding to this agent's net within the transaction.
All right, thank you for that, Casey. I've got one more left in here for you, and then we'll continue on.
Great.
So someone else had posted in here, if we could go over, say we're adding a commission concession and or referrals, and then making it trackable later for a report.
So in this question, there's a couple different scenarios. Sometimes we're paying out referral fees. So maybe Casey got this lead on a referral, and he needs to pay out a dollar amount for that referral. Let's go ahead and look at Casey's commission plan. A referral, I know it can be a pre-split or a post-split deduction. Either place you want to put it, let's go ahead and say it's going to be a post-split deduction in this scenario. We can add in this referral fee being paid out. Let's say it's 20% of whatever is remaining. And we're going to define who we're paying it to. Now to track this, we're going to go ahead and use a tag. So anytime we use a tag, we have a payment report that allow us to track tags individually. So if I have a tag called referral fee, or I create one, I can go ahead and add that tag to this deduction. What this allows me to do in my reports is I can pull up a report specifically for my tag referral fee and have a full breakdown of everyone who's paid referral fees, how much and to whom they've paid them to, as well as everyone who's received referral fees, how much and who they received them from. So this is the best way to track referral fees being paid out, is using your add a tag feature. Another very common scenario is maybe an agent's just receiving a referral fee. There's really no transaction tied to it, but an agent put out a referral and is going to receive payment. You need to track that in Brokerment for tax purposes. In that scenario, we would go ahead and create a referral transaction for our agent. Now, what's great about this is whenever we create a transaction, we have a fully customizable list of transaction types. I always recommend, if you guys take on referrals, to go ahead and head into your fields section under transaction types and go ahead and add in a referral. What this allows us to do now is create a transaction specifically for that referral. Here in the price, we can go ahead and put in the amount of the referral. Maybe it's $1,500. And where we're setting up the payout for this, we'll go ahead and add the agent that is receiving the referral. And I'm going to go ahead and allocate him 100% of that referral amount. So we're going to just pay him that $1,500. So now what this looks like when we come into commissions, we can pay him that $1,500 referral. We can also cycle it through their commission plan if we like. So if there's still deductions or splits that go on with the referral fee for the brokerage, you can even have a separate commission plan specifically for your incoming referrals. The other thing you can do is you can just go ahead and remove any deductions. If you want to pay that agent out at 100%, simply changes to 100% split. And now we've created this transaction paying out our agent $1,500. And what's great about it is to track these individually. We can look at our reports and we can filter these reports by transaction type. So if I want to see just my referrals that have been closed year to date, I now have a report that shows me specifically all my transaction types that were referrals, who the agent was, how much they got paid. I can even make adjustments to their sales volume if we don't want them to get credit for sales volume on that transaction. We can always adjust award allocation for that transaction.
So Casey, just a moment ago, why zero gross?
Also, total gross, this is a metric that we were covering talking about sliding scales. So when we're initially creating a transaction, that total gross is always going to reflect what we put in this box here when creating a transaction, total gross commission. Total gross commission, again, is always going to be a combination of both sides. So even if you're representing just one side, let's say we represent the listing side, but we know the buying side is getting 3% as well, we can always enter 6% as a combination of both sides. And so when I look at the total gross, it'll always reflect 6%. of the $1 million property. This can always be changed within the transaction as well by simply clicking on the total gross line and adjusting this value to whatever you like. So I think we've covered everything today that I wanted to cover in the agenda. I do want to leave this open for any additional questions you guys may have. I would love to cover those with you now. Also, as Frisco said, you can reach out to us via phone, support chat, and or book a meeting with your implementation specialist.
Awesome. Well, great, Casey. Thanks for taking us through, everything that we had up on the agenda and going through all the questions that have come in so far. But does anyone have any lingering issues or questions they'd like to go ahead and address now? Floor is open. So Ellen would like to know if you could readdress the tags again.
Yeah, so in today's best practices, we didn't really go too deep into tags. Let's go ahead and take a moment to look at tags.
It looks like we have a few that aren't quite understanding how the tags work in terms of being able to. So with the tags, there's a few special caveats to tags. One of them is, if we're just setting up our commission plans, when we add in that tag, regardless of what the tag says, the payments report is now going to keep track of everything that's happening to that item that's tagged with whatever it is. So this BPO paid, if we were to add on a tag for BPO, that payments report now tracks every single transaction and every single time this BPO tag appears. It'll also track exactly the amount of money it appears for, who it was paid to, who it's paid from, allowing us to use our port to track those deductions. Now, one of the reasons why we didn't get too heavily into tags today is because this also plays a very important role in QuickBooks. So again, not really the focus of today's training, but if you do have a QuickBooks integration, or if you're thinking about getting a QuickBooks integration, tags can be used to relate a certain deduction with a specific QuickBooks account. So we don't cover it too heavily because there's a lot of intricacies that happen with tags. But if we were going to use it for just to track a deduction, then yes, just adding a simple tag to it. The best way to do that is on the commission plan itself. That way, every time that deduction pops up, the tag is already applied. So I hope I kind of explained a little bit more about tags in a useful manner for you guys.
Absolutely, and I highly recommend anyone who wants a detailed overgoing of tags or wants to look at the tags you currently have or maybe get a tag setup, I would definitely book a time on your implementation specialist calendar so we can go through your commission plans individually and get that configuration set up for you.
Now, we have another one come in, and this is from Leanne. How do you do shared commission with another agent? So co-listings.
All right, so yeah, we can define how to split up deals between agents. And when we do that during the transaction creation process, or we can do it later in the transaction as well. But if I was creating a transaction and we were co-listing together, me and another agent, we can set that up just the same way by choosing what side we represent and then adding in both of our agents. So today maybe we have Casey Gregory as an agent, and we are also working with another agent, Mr. Brokerman. So in here, once we have a value, whether it's a percentage or a whole dollar, we now decide how are these two agents going to split this deal. So how are they going to split this 3%? We can define that any way we like. We can split it 50-50, 60-40, however we want to. How it's set up here is each agent's commission basis is going to be half of this 3%. So when we look at the commission breakdown on this specific transaction, each agent should have a commission basis as half of the 3%. Another great thing you can do here, besides choosing how to split that deal, is maybe one agent is a lead agent or one of them is a shower, whatever it may be. We only want Casey Gregory to get credit for sales volume. We can always, again, adjust award allocation for this transaction. We can make changes to how these agents are splitting the deal. We can also separate how sales volume is calculated. Every brokerage is different in this scenario. Some brokerages want both agents to get full credit for sales volume. So each agent would get credit for $250,000. You can do that. You can also give all sales volume to one agent. One thing that I want to point out to everyone here on this meeting that is very important to sliding scale commission plans is whenever we have a closed transaction and we make any changes or view commission plans on a closed transaction, it is very important that before you leave that transaction, you come back to refinalize these commissions. This is what makes sure that your sliding scale commission plans are all being accounted for. Leanne Bake, I see your question. What if one of the agents wants to share his commission with the TC? That's going to be a deduction from that agent. So I would just select which agent we're going to be paying a TC fee on. We can go ahead and add that as a post-split deduction. And then decide who our transaction coordinator is that's going to be receiving that money. So in this scenario, Casey Grady paid his transaction coordinator a fee of $250 that only came out of his or her commission. For agent deductions that reset at anniversary dates, how do you make sure the amount deducted stops at a certain amount, i.e. $5,000, and doesn't go over that amount with having to check the report for the tag? So the great thing about our sliding scale commission plans is that is all automated. So once they go over that cap, those deductions are either increased to the next tier, stop happening, however that sliding scale is set up. What we see very common, and it goes into what we just covered. If you have a sliding scale and it is not capping or working as it is supposed to, I recommend everyone to come into your reports, look at your closed sales report or your agent report to look at that specific agent. And on this filter, we can filter by not finalized and finalized commissions. So if I look at just closed transactions, if I find any transactions without finalized commissions, that means someone went into the commissions after the transaction was closed and made some type of change or save. Any of these values on not finalized commissions are not counting towards your agent's sliding scale cap. So we do see this. Always recommend the first thing we do is come into these finalized or not finalized transactions and just make sure you finalize them on each of those transactions. Head back to your current transaction that the sliding scale isn't working on and go ahead and refresh the split, and you'll see that sliding scale come back in line where it's supposed to. So if there is any more questions, again, feel free to go ahead and ask them now. We'll definitely have a few minutes to get some more things answered. If not, like I said, we'll definitely look forward to you guys getting a booking on any of your implementation specialist calendar as well.
So if no one does have any other of these commission-related questions and everyone is kind of wanting to go home now, then again, we appreciate it. Happy holidays to you all, and thanks for joining us here.
Yeah, thank you, everybody. Happy holidays.